All right, what's going on, man? We got another trade recap today for today's Wednesday, June 24th, and we have fully passed these sets of evals. On Alpha Trader, you can see all that I have left right now is a test account. But I'm just going to pull up my email real quick. Pulling up my email, you can see 8:50 a.m., 8:55 a.m., 9 a.m., 3 of these emails telling me that I've passed these Alpha Futures premium accounts. So I still have to activate the qualified accounts, which I will do so in a minute after this trade recap. But yeah, fully passed these accounts, these evals in 2 trading days, which is the most ideal scenario. Only paid a little less than $300 for them, $285 for all 3 of these accounts with the 40% off discount on Alpha Futures, code FST if you want to take advantage of that, by the way. Shameless plug, but as always, let's get into my daily bias, what I saw coming into the morning, and how I was able to execute. So this is what we looked like coming into market open, and it was essentially the exact same bias and exact same scenario as yesterday's daily bias. And I said we're pretty much in the exact same scenario as yesterday, as all we did yesterday was consolidate after the AM session. You can see this hourly range that we are still in. These 2 candles right here were yesterday's AM session tapping into this 4-hour gap, and then we literally did nothing. So I said still looking for lower on both ES and NQ as the high time frame market structure has shifted. I also said ideally we'd resweep some of these relative equal highs off open before getting the move lower, which would present better opportunity for shorts. So something like coming up and then some sort of manipulation and then continuing lower. And that's exactly what I wanted to see, and that's exactly what actually ended up happening. So coming into the market, I actually realized we had an SMT at these highs pre-market in terms of NQ and ES. ES had come up and taken these highs pre-market. NQ didn't, but then when the market opened, I am zoomed out to the 15-minute chart, want to see what we're going to do off open, and I noticed we have this 15-minute gap, so I marked this out. I'm like, there's potential to come up, tap this 15-minute, and then continue lower. That would be the most ideal scenario, which is exactly what happened. We came up, market opens, and we come in and fully fill this 15-minute gap, and we also put in another SMT at the highs. You can see ES came up and took this high here, NQ didn't. NQ is weaker. I'm already looking for shorts. We're respecting this bearish 15-minute gap. That's literally all I could ask for. Like, that's exactly what I want to see in this scenario. So after coming up and rejecting here, putting in another SMT, I'm just looking for an ideal entry for myself. I'm just looking to get filled. I'm looking for good bearish reactions that I can enter on. So zooming in to the 1-minute chart, from here we had this huge 1-minute gap that we formed off open, and because I'm scaled into the 1-minute time frame, like I really ideally I need to see this big bullish 1-minute gap get ran through in order for me to have 100% confidence in shorts. Even though the higher time frames are telling me short, 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 I'm also realizing that we are, like I said, coming into the day, we are still in this big hourly range. So although the higher time frame bias is shorts, I want to be extra cautious taking a trade in this range, because we could easily like this is what my thought process is in the moment. We could easily just continue to hold this big 1-minute gap and just continue to be range bound and not deliver. So I wanted to see this get ran through. We eventually ran through it, and once this candle runs through the gap completely, it's a little bit messed up here on the Alpha Trader, which is also why I have the Top Step Trading View charts pulled up with me at the same time. But that candle did end up running through that gap, and so after this candle runs through this gap, I then place a limit order for a 1.2 RR, wanting to get filled. Just seeing, okay, we've run through the gap. Everything is aligning high time frame wise. If I'm lucky enough to get a pullback on this next candle, like maybe this next candle opens, puts in a wick, and then continues lower, which it did, but the wick of this candle just didn't go high enough to tap me in for my limit order. I think I actually had it placed for a 1-to-1 because this is an eval and I'm just trying to get filled and trying to take advantage of this move. I don't need to be too cute with my RR because I am risking that full drawdown of $2,000 to make $1,500. So I'm literally going for a negative RR trade. That being said, I never got filled here until we came down and already took the internal low. And so at that point in time, I take my limit order off, realizing that we've already taken the internal protected low. So at this point in time, I need to wait and see, are we going to continue past this internal low to the draws on liquidity? We get these 1 minute candle closes. I'm like, that's a good sign, but I'm zoomed out. I want to see how these 5 15-minute candle close. These 5 or 15-minute candles close, because the higher time frame candle closes are going to give me better context into, is this just going to be a sweep? Are we going to hold it? How aggressive do I want to be here with my entry? Do I want to be placing a limit order in this scenario? So the 5-minute candle, and I believe this was the 15-minute candle close as well. You can see the 15-minute candle close is basically a indecisive wick. Like, yes, the wick from the upside is bigger, but I don't like how you can see the 15-minute candle wick here is also rejecting from the lows, realizing that we have these stacked lows that we failed to go lower from. Like, this is a huge area of rejection thus far. So I don't like that rejection wick on the 5 and 15-minute candles. So in order to take a trade here, like, yes, it still makes sense. We're continuing lower, and we have these bearish 1-minute gaps. So my thought process is, okay, I have to be a little bit more defensive with my entry. I can't be taking a limit order in this scenario because of the factors that I just laid out. So I wanted to see us, if we're going to come up and retrace into these gaps, I need to see them get respected to let me know, hey, we're still going to continue short down to the lows, because that ultimately is my draw on liquidity for the morning. And you can see it takes 1, 2, 3, 4 candles of a retracement, and then the next candle opens here and pretty much eats up over half of that move. It's not the best displacement candle, but this was enough for me to give me confirmation. And honestly, when I entered, I'm not gonna lie, I thought the candle close was all the way down here. Like, it was like the candles were counting down. I accidentally was still on a limit order over here, so I'm like, I see there's like 2-3 seconds until the candle closes. I'm trying to get back to the market order, get my contracts, the number of contracts right, in terms of the risk on the trade. And yeah, trying to get my risk parameters set, and the last couple seconds of this candle came back up. Not the most ideal. Ideally, I'd want to see this candle close at the extreme of the wick, like the candle body close at the extreme of the wick. That would have been more ideal in terms of the displacement candle. It wasn't the worst thing ever, because we still had these bearish reactions. And so, yeah, this is basically the trade off of this candle close. The next candle opens up and follows through immediately. And it just so happened, with my risk, I think I put on 10 contracts. 10 contracts was the amount of size that I was risking, because the ideal, it was about a 1.2 to the ultimate 4-hour sell side liquidity, which was my ultimate target. But I also realized, zooming out, we have these internal lows, and then we have the 4-hour lows. If we go to the trading view charts, this 4-hour low right here is my main draw on liquidity for the morning. You can see it got tapped to the exact tick, and we have now rejected off of it. That's how you know that your draw on liquidity is correct, if we take it and then reverse, or if we take it and then start consolidating after that point in time. This is my main draw on liquidity. Like I've already said, the high time frame structure is a little bit different on the Alpha Trader platform. I don't know what's going on with it. I hope it gets fixed soon, but this 4-hour low should really be up here. You can see in context with the actual NQ monthly chart. So this 4-hour low is, you can see, if I just mark it out here, you can see it's 29,524.5. and this is 29,524.5 where this line is. So this is that 4-hour low. Like I said, I'm just gonna have to kind of use the Alpha Trader platform as my execution platform, and then have um, as long as Top Step keeps giving me the free data, I'm gonna keep using this. But if this eventually goes away because this account is blown, then I will just have to buy the monthly CME live data on actual TradingView for like $10 a month or whatever it is. So, but yeah, that was a trade. Taking a short here. Like I said, my bias was short. That was my exact thought process when this was playing out. I felt like I had enough confirmation here. Waiting for the retrace and a flip out of there because we wicked out the internal low already. So I want to have even more confirmation. And my take profit was literally, because it's a negative RR, like if this was a normal trade, this would have gotten break even. But the good thing about risking the full drawdown on your evals is that your win rate is going to be a lot higher because you don't even need a 1-to-1. All you need if you're risking $2,000 per trade, all you need is a 0.75 risk to reward in order to half pass, get that $1,500 mark in a day. And that's all I needed. It literally just happened to align perfectly with where this sell side liquidity was. And so my take profit was at this first sell side liquidity. That's all I needed to fully pass these accounts. And like I said, because we're within a high time frame range, you can see how sloppy the delivery was. We eventually did come down and take that 4-hour sell side, but you can see how sloppy the delivery is, and how chopped the delivery is. And it's because the higher time frames and the 1-hour chart literally looks like this. If the 1-hour chart, the higher time frames are chopping, you can expect when you zoom in, it's just going to be even more chop and even more noise. That's why I was a bit more defensive with the entry, not placing a limit order. And that's why it's a really good idea to be more defensive if you come into the morning and the 1-hour looks like this. You have to put yourself in a more defensive mindset, just by default coming into the morning, because until we break out of this range, it's hard to have a ton of confidence that we're going to move with good volume, and good volatility. So that's something to notice as well from this morning. Maybe you got chopped up, or maybe you took a break even. Just notice the lower time frames, even if we delivered to the draw and liquidity. That's why I wanted to see a retrace, or take some of these highs, or tap into that 15-minute gap off open, because I realized this manipulation move up would give us a lot more room to see some displacement and to actually execute on, because we're within a higher time frame chop zone. So with that being said, I'm not going to yap on too long. That's a trade recap. Fully passed these evals in 2 days on one attempt. Literally, it's a really good feeling because I hate being stuck on evals for multiple weeks, like I was last time. Sometimes it's just gonna happen. That's just a part of the game sometimes, but it feels really nice to be back on a full stack of 3 accounts, 3 funded accounts that I can actually be making money from. And I'm just ready to get after it and continue to be disciplined and to continue to follow my rules. I know that the probabilities are literally in my favor. And I just want to pull something up real quick. So actually coming to Claude here, in terms of actually understanding your probabilities, it's so important. All you have to do is literally go to Claude or your favorite AI, chatbot, whatever. Tell them you're trading a Top Step 50K account. Tell them the exact rules. It can also obviously use the internet and pull up the exact rules for you. But if you give it the exact rules and say, okay, I have a 60% win rate, 65% win rate, 70% win rate. I am risking 1/4 of my drawdown per trade. I am risking $500 per trade. What are the probabilities with a 60%, 65%, 70% win rate that I'm going to get a payout once I have a new set of live accounts of XFAs? With a 60% win rate, you have a risking 1/4 of your drawdown, so $500 per trade, And this is the odds of getting to a $2,000 account balance before blowing the account. So you just have to literally just go to AI and give it your exact rules and your exact risk management plan, and it will literally tell you these statistics and put it in front of your face. And when you see these statistics, you will no longer want to break your rules, right? You see that. Ideally, I have a 70% or so win rate, and with a 70% win rate, it is a 92% payout percentage that I'm going to get a payout. Even if, let's say, I'm trading bad and I have a 60% win rate, it's still a 77% chance that I'm going to get a payout before these sets of accounts get blown. So I just want to put this in here as well to literally physically show you that the probabilities are in your favor. Literally use this to your advantage. Once you have back tested data, once you have forward tested data, and you actually keep your trading journal and your statistics in a spreadsheet like I do, like it just makes it so clear and obvious. You will not want to break your rules after that point in time. So that's just a little bit of a recommendation, I would say, if you're having trouble like seeing that there's no reason for me to break my rules, to overtrade, to be emotional, to overreact to one individual loss, because I know that the probabilities are in my favor. And if you just get one payout, I spent $300 to pass these accounts. If I just get one payout of $1,000 per account, which is getting to that $2,000 account balance and taking half the drawdown, so that's a 3K payout, I am 10xing my money. There is a 77% chance with a 60% win rate that I 10x my money. There is a 92% chance with a 70% win rate that I 10x my money in a month or 2 months. Where else are you going to do that? Please use this to your advantage and take advantage of these prop firms. That's all I got to say. This video is already longer than it should be. 17 minutes is kind of crazy for an eval trade, but these accounts are fully passed and ready to get after it throughout the rest of the week and into the future moving forward. So hopefully we can get out of this range on Thursday, Friday of this week and start to either get a deeper retrace here so that we can target shorts. That would be the most ideal situation at this point in time, because like I said, zooming out, the higher time frame structure has shifted in my eyes after these failed longs to buy side to the all-time high, and even coming to the daily time frame. You can see that we closed below this daily swing low and have closed through the daily fair value gap. So this is telling me that we're going to further continue lower. So hopefully we can break out of this range, and we will see what happens. So that's all I got, and let me know if you took a trade or not. Appreciate you watching, and I will see y'all tomorrow in tomorrow's market recap. Peace.